Today, I'll be diving into everything you need to know about SoFi, breaking down the latest data, market movements, and what could be on the horizon. There's a lot to unpack, so let's get right into it. Hello everyone, welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads, and also enter our giveaway. But before that, alert this is not a financial advice video. SoFi saw a dip of 4.11% today, but let's clear something up right away. This drop wasn't because of any negative news directly related to SoFi. There were no new SEC filings, no company-specific developments, and no major announcements. Instead, the broader market's reaction to initial jobless claims was the primary driver of today's decline. What we saw today was likely driven by algorithms reacting to the economic data. When jobless claims data hits the market, it often triggers automated trading, which can lead to sell-offs across the board. SoFi wasn't the only stock affected, but what stood out was the lack of significant buying pressure for SoFi compared to some other growth stocks. Today's trading volume for SoFi was 50.6 million shares, slightly below the average of 59.1 million. While this might seem like a substantial figure, it's important to note that the volume has been trending lower over the past week. This dip in volume is likely due to the increasing role of algorithmic trading filling the gaps. Interestingly, other growth stocks saw higher volumes today, but SoFi didn't experience the same influx of buying. For example, SoundHound and a few other names in the growth stock space showed significant activity. Despite this, SoFi's price movements today appear to be more of a market-wide adjustment rather than anything specific to the company. The primary trigger for today's volatility was the initial jobless claims data released in the morning. As the market digested this information, we saw a wave of volatility toward the end of the day. Investors appeared to be reacting in anticipation of tomorrow's unemployment report, which is forecasted at 4.2%, slightly higher than the previous 4.1%. Federal Reserve Chair Jerome Powell recently referred to unemployment data as the granddaddy of all reports, highlighting its importance in shaping market expectations. Tomorrow's report could be a key driver for SoFi and the broader market. Now let's take a look at short interest. Shorts returned approximately 240,000 shares today, which is a bullish signal. If the shorts believed today's drop was justified, they would likely have doubled down. Instead, the decision to return shares suggests that today's dip may have been a temporary pullback rather than a sustained downturn. Currently, 13.17% of SoFi's free float is being shorted, equivalent to about 140.32 million shares. Despite the day's decline, this level of short interest could add fuel to a potential rally if sentiment shifts positively in the coming days. Options activity today was also revealing. There were approximately $23 million in call options and $6.35 million in put options, with about 48% of the overall options activity being bearish. Notably, there were some large transactions in the options market, including a multi-leg transaction involving $1 million in premiums. This transaction appeared to involve a combination of buying and selling puts, suggesting a hedging strategy with a slight bearish tilt. However, the consensus price target for call options remains at $17 to $50, indicating that many investors are still optimistic about SoFi's potential upside. On the put side, the target price is around $15.50, reflecting some caution but not outright pessimism. Let's shift our focus to SoFi's technical indicators. Based on the Elliott Wave technicals, SoFi has a pivot point at 15.9. As long as the stock remains above this level, the outlook is generally bullish, with potential upside targets between 18.30 and 19.44. Currently, SoFi is trading below several key moving averages, including the 5-day, 10-day, and 200-day averages. The stochastic RSI and supertrend indicators also point to short-term weakness. However, the stock's fundamentals remain strong, and today's decline doesn't necessarily signal a longer-term downtrend. For tomorrow, the key levels to watch are 1603s on the upside and 1438s on the downside. Even if tomorrow's unemployment data disappoints, it's unlikely that SoFi will break below $14.38 based on current market dynamics. One of the most intriguing trends in the market right now is the rotation of capital. We're seeing money move out of money market funds and into both equities and cryptocurrencies. This shift could benefit growth stocks like SoFi, as increased liquidity often translates into higher demand. Looking back to 2021, we saw growth stocks, including SoFi, reach record highs regardless of their fundamentals. If a similar scenario plays out in the coming months, we could see SoFi return to levels above $20. What's next for SoFi? SoFi remains well-positioned to capitalize on market opportunities, and today's dip should be viewed in the context of broader market dynamics rather than company-specific concerns. Tomorrow's unemployment report could serve as a catalyst for renewed buying interest, especially if the data aligns with market expectations. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.